Hi, I'm David Tice,
And I'm Paul Wanamaker.
and we are both trust officers, financial planners, CPAs, and certified financial planners at the Krogan Trust Department.
And we're going to talk today a little bit about the One Big Beautiful Bill, which was passed this past July, which brings a number of different tax measures into permanent status and adds a few new ones.
Let's get started.
Now, Dave, there's some provisions of this One Big Beautiful Bill that not only apply to people, individual taxpayers, but to businesses.
Yeah, that's correct. There's a couple key changes that I'd like to talk about. One is just an extension made permanent of the Tax Cuts and Job Act, and that's Section 199A for you tax aficionados. For the average person, we call it qualified business income tax deduction. Basically, think of it as a 20% haircut on pass-through entities. So partnerships, S corporations, sole proprietors, people that own rentals, off of your gross income, you basically get a deduction, which is good. It reduces income of 20%. That has been made permanent. They were thinking about eliminating that way back in the day. It's been made permanent for now. So another one that we made with a new rule from this tax bill is Section 179 expensing, which is a huge thing. It's been increased to $2.5 million, starts to phase out at $4 million in equipment purchased in that year. Basically, the question is whether you write it off immediately or if you amortize it over the appropriate depreciation schedule. So it gives you a flexible tool to manage your earnings and your net profit for that year. Lastly, bonus depreciation.
Okay.
No cap on that. There is no income caps. And if you're looking to harvest a loss, it's a really good tool because you can kind of mix that, marry that up with Section 179 expensing, and you can, max out with Section 179. And for property that has a 20-year amortization or depreciation schedule with the IRS, you can utilize bonus depreciation, and there is no cap on that, and you can harvest a loss with that.
Is there anything different with the research and development expenses? I know that they were talking about making that, permanent part of the code.
Yeah, that is absolutely correct. Yeah, so they changed that to no longer have to amortize it over a number of years. You can expense it immediately unless you're a foreign entity. So research and development costs can now be expensed in the year incurred.
If you have more questions about these business provisions, and there are more, we invite you to get in touch with us either by making an inquiry on our website, by giving us a call here at Krogan Trust and Investment Management. We look forward to hearing from you and answering these questions for you and learning more.